Okay, let me cover quickly the IWM, the Russell 2000 ETF. There's quite a few traders who trade the IWM. I certainly do. Um, and see what's going on. So basically the same story here. I draw the uptrend line from November of 2012, and you can, and let me see here. You can draw it like this. Okay, this is the February low. I'm sorry, the May low on this, and or you can go ahead and just draw it like this if you'd like. Actually, I prefer this, and see what's going on. So again, exact pattern symmetry. This chart is a little bit different in structure than what we saw on the S&P 500, Dow Jones and such, because the damage done on the Russell 2000 was far severe from the highs in on first part of March, and of course we came down to April, May 15th. I'm sorry, multiple bottoms, and then we took off from here to the first week in till August, and then we had a crash and burn all the way in August, in between zigzags of course, and now we're on the way up. So what do you think might be going on? Well, there's many different economic factors that drive the Russell 2000. We have many different sectors in here, but keep in mind that one of the biggest beneficiaries of the one of the biggest proxies that for the Russell 2000 is lower interest rates. Lower interest rates allow businesses, American small businesses, to borrow money cheaply, and that's a plus. We also have the fact that the U.S. economy is on steady footing. We had some strong numbers overall. We don't have the inflation components that came out. The inflation numbers that came out on the PPI and such showed some moderation due to lower energy prices and such. And that obviously means that the Fed is going to stay put, and they have openly said it too, that they're not in any rush to go ahead and raise interest rates. All this is somewhat positive for the Russell 2000, more so than the other large cap sectors. Okay, so that's number one. Number two, we have had the U.S. economy being the engine of growth as world economies somewhat falter. The European economies have been rather slow due to the Russian sanctions and such, and of course all that helps the U.S. Small cap market, which services the more so they're not as, let's put it this way, held hostage to what's happening on the global arena. So as long as the U.S. economy and the U.S. consumer keeps on spending and propping up the economy, and U.S. industrial production and such remain strong, it's all fine and good for the Russell 2000. Saying all that, this is where we are. Let me take a little, zoom in a little bit. I'd mentioned this more than a week ago. It's exactly what's going on right now. I said we're going to come back and test the backside of this 34 moving average, 34-day moving average, and possibly the 50, and that's exactly what happened today. Okay, you can see my numerous charts, more so than needed, that I put through intraday to help my traders and members to go out there and trade the markets, and you can clearly see that that this predictive type of forecasting that I do based on so many different factors, including political, economic, game theory, charts, my personal experience, understanding of what might be happening, pattern symmetry you might want to call it. It clearly is the case. So at this point in time, I believe that we can overshoot and get up to about 116 plus, or we stay here and we rest a little bit. Now, what does resting mean? Resting means that we are, let me get the drawing tool out. Rest means that we could even come down, test 113.50, which is going to seem pretty dramatic, and then move up again. So if we follow the channel, this channel, we could be destined to move up to about 118, which would be around, which would be what, 1180 on the Russell. Very well possible. Okay, so that's the scenario that I think might be playing out. Saying all that, we have had 1, 2, 3, 4, 5, 6 histogram bars here, as you can see here on the lower side. So if we compare this to what happened here, then we still have some room to go. And this was obviously an extended period of movement. So if we, let me get this out. And again, this is predictive analysis in motion, okay? And see what happens at this point. If we do this, let me get this parallel line. If we do this, this is what had happened, right? We moved up here, and then we let me do this, create parallel line. So okay, so very similar to what's going on here, right? Let me zoom out so you can see it. Now what happened at this point? We had a little consolidation. So let me zoom in and show you what the consolidation is. This is the consolidation. So this might very well happen here. Right there. And create a parallel line right here. So again, it falls into the same pattern that I'm mentioning. We come down, we test around the 113 level, and then we move from here. Now this is the daily chart. Let's look at a quick 60-minute so we have an idea of what might be happening. And of course, all these charts are covered, especially the shorter term time frames are covered during my intraday live Twitter feed. And those are invaluable for traders who are serious about trading the markets. So the hourly charts are showing me this here. Let me take this out. Actually, let me take everything out. I have 3 minutes left. Okay, drawing tool. Delete all 13 drawings, and we have a clean chart. So see what's going on? Look, squiggly line. Keep it real simple. This is this. We never came down here to the 107 level. We've talked about this before. We are still, keep in mind, in somewhat of a bear flag. We need to break out over 115 or 116 in order to get this pattern to move up. This pattern completes itself at 1200 or 120 on the IWM. I don't know whether we're going to get up there. My gut tells me no. But saying all that, it's a very powerful market. They could and so it could happen. On a short-term basis, we could very well we pull back a little bit and then we go up here towards the 117 level. I've shown this before. I'll show it to you again. This is the channel. It has to have a little bit of a consolidated pullback because at this point in time, the standard deviation from the 34 and the 50 is getting rather wide. So on a 60-minute basis, minor pullback and then we go. But it looks very, very likely that we get towards this 116.50 level. So traders, just keep that in mind. The other scenario is on the IWM that we let me see this here. Okay, so basically the other scenario is we basically come down here, test 113.20 and bang up. Alright, will it pull all the way back here? I don't know, so we'll see what happens. So that's that's IWM, and I have some very specific charts on this on my intraday report. So please study those too. Let's look at the IBB. I showed this before on the real-time Twitter feed. I've been showing this as a constructive chart. Please listen to my old videos for a while now. So the biotech index is firm. Mergers and acquisitions, takeovers, all kinds of good stuff. Drug approvals are taking place. This thing has broken out, and at this point, given the fact that we're well above the Bollinger, okay, we're well above we're actually, where are we? Let me see. Let me change the color on this so we can see. I'm running out of time. So we are slightly above the Bollinger, so it looks likely that we're going to come in a little bit. So again, very constructive. This is just starting the move, so we have much more room to move. Next video, I'm going to cover the VIX and the RVX, and then we're going to wrap up the index portion of this of my nightly report.